All right, thank you, Peter Mosey, for your confirmation. I hope you all can hear me better now. Only just saying your message about the sound, and I hope you can hear me much better now. If you can hear me, please indicate. If you can't, also please let me know. Thank you so much. So I'm just gonna run back my analysis, everything I talked about from top to bottom. Thank you so much. Thank you. So now, what I was talking about on NASDAQ is that overall I'm bullish on NASDAQ. I still want to see price continue to go to the upside because if we go to the monthly, you can see that we've been trending to the upside. It's always been bullish, literally forever bullish, right? Now, what I do is I go to no worries, it's all good. I'll just run it back from the beginning so everyone can hear me clearly. So now what I do is I'm just going to remove everything on my charts. So what I do is now that I've derived the overall market direction to be bullish and I'm anticipating for price to continue going to the upside, now I'm looking for my higher highs and higher lows. And as you can see, this is the higher high and the higher low, the higher high and the higher low. And this is the higher high, right? Now I'm looking for a trade setup. And the trade setup that I'm looking for is going to be a buy because the overall market direction is bullish. So now, in as much as I could see a retracement, I wouldn't be interested in taking that retracement trade because it's low probability. Because price can mitigate anything and continue higher. Even if it wants to retrace, I don't know what candle is going to retrace for. Nobody knows that, right? So that is why our major analysis is going to be for it to continue going to the upside. Now, the next thing we do, now we've derived our key level where we're working with, which is this low and this high. The next thing we do is the next thing we do now is to look for key levels that price could potentially come into. And what do we see right here? The first thing we see is this inefficiency resting right here. That's the first thing we see. We outline that. What's the next thing we see? We go to 4 hour time frame. The next thing we see is this low resistance liquidity resting right here. This low resistance liquidity. That's the next thing that we're seeing. So this is liquidity. Price can easily smash through this key level, running out this liquidity because so many traders who have been on the buy, this right here would have been the stop loss. Price came back again. They made another money from this key level. So a lot of stop losses are going to be resting below this low. So once I outline that, the next thing I'm doing now is to look for key levels right here that price could potentially retest into. Now I go to 8 hour time frame, and on the 8 hour time frame, I'm seeing that the inefficiency in that key level is right here. So the next thing I go to 4 hour time frame, 4 hour time frame inefficiency here, here, and here. Then I go to 1 hour time frame. So let's look at 3 hour time frame, so what it looks like. So on 3 hour time frame, we're having efficiency here, 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 and here. We go to 2 hour time frame. On the 2 hour time frame, you can see we're having an inefficiency here, here, and here. We go to 1 hour. Now, 1 hour makes it look a little bit better because it shows us that right here, we don't have any major inefficiency. So our focus comes down to this line right here. So once price comes into this line right here, taps it, we're looking at price action to see a 15 minutes or a 5 minute shift in market structure. If we do see a significant shift in market structure from 5 minutes to 15 minutes, we're looking for entries to take buys. Now, the last thing we now do is we use our Fibonacci from the low to the high to derive the discount and the premium position, and also the extreme discount and extreme premium. Right here from this midpoint being the equilibrium, anything below that is discounts. And look at how price came to the discount the first time, expanded, came to it again, expanded. Now, right here, you can see the line on 1 hour. That line right there is resting at a discount position. Now look at our extreme discount. What is resting right there? Inefficiency. So if for any reason price should come to the downside to mitigate this extreme discount, in my opinion, that's a high probability setup for me to look for a 5 minute shift in market structure. If I see a 5 minute shift, I'll be looking for entries to continue higher, potentially creating even a new higher high. So that is what I'm watching on NASDAQ, and I'll be watching this very closely this week because this is a high probability setup, in my opinion. And if I do see price come into my zone and show me a shift in market structure in the smaller time frame, I'll get into a buy setup. And I'll also share that with every single one of our members as well. So if you do have any questions based on this analysis, feel free to drop it on the chat. So the other thing I was talking about my analysis on the dollar as well. So for the dollar, if we go to the weekly, you can see that we have this drawn liquidity restaurant right here, this inefficiency. And if we go to the daily as well, you can also see a gap right here. So another thing I was talking about was high resistance liquidity, low resistance liquidity. You can see the high resistance liquidity right here. Price took liquidity from this high, then dropped, and then found it. So price was really struggling to even go up after it dropped from creating this high resistance liquidity right here. Every high and low is liquidity, right? The only thing is you need to understand the key levels that are high resistance and key levels that are low resistance liquidity. Now, key levels that are low resistance liquidity like this, these are areas that you should never put your stop loss below these areas because price can easily smash through it. You can see how price dropped through that position, running those stops. And you can see how price was finding it difficult to rally above this high because it's high resistance liquidity. Price can potentially still take this high, maybe in the future. I don't know when that's going to be, but it's going to encounter a level of struggle to do that. But lows like this, it doesn't encounter any sort of trouble before it can run below these lows. And another one to also look at is this right here. This is a low resistance liquidity, and price can easily smash through this low. And also it has an inefficiency resting below it. So if we can do this all day on and on, I can show it to you with different pairs, even in crypto. Like for example, if we look at Bitcoin, you can see that Bitcoin, this high, we have a high, a low, and then price came up, took liquidity from the previous all-time high, and then dropped. This right here is high resistance liquidity. Price, this is high resistance liquidity, and that is why you can see how long it took price to break that high. Even when we came to the high the first time, you can see how lethargic the price action is. You can see how much price was struggling to rally above that high because it's a high resistance liquidity. It's so difficult for price to gravitate above a high resistance liquidity. It doesn't mean it cannot run those highs, but it means that it will find so much struggle before it can expand and rally above those highs. Now, I will show you another example with Binance Coin. Now, Binance Coin, you can see right here, this high right here is low resistance liquidity. Low resistance. So whenever Binance is ready to drop to rally above this high, it will instantaneously blast through the highs and just continue high because this is low resistance. Does that make sense? So I've just basically used several examples to outline this both in crypto, forex, and indices as well because it works with every single pair. It doesn't even matter whether it's a crypto, forex, or a stock, or you're trying to invest in the stock market. It works the same way with the stocks. So I'll also show you an example with commodity like gold. Now you can see right here, price kept leaving this highs. This is low resistance. You can see price didn't take liquidity from this overall high and then it dropped. And look, this one is also low resistance liquidity as well. Now look what happened to all the low resistance liquidity. Look how price expanded. No retracement. Literally went straight to rally above all those highs. And the reason for that is because every single high right here is low resistance liquidity, including the all-time high right here. No liquidity was taken right here. That is why you saw price expand to rally above these highs, taking them all out, wiping out every stop loss that was resting above these highs. So if you do have any question based off my analysis, feel free to drop it in the chat. I appreciate you all for tuning in, and I'll talk to you on the next live stream. Have an amazing day, everyone.